You're looking at, well, options from a macro and a micro perspective today.
Indeed, Romaine. A lot of people are wondering how that VIX can be below 17, having a 16 handle, given the fact that we have this uncertainty around the debt ceiling and now Fed Chair Jay Powell introducing the idea. I don't know if it's a full pause, but it's something a little bit different than he had been talking about for the last year. Let's bring Alan Nuckman, CEO of Bullseye Option, into the conversation. Before we talk anything options or related to the markets, Alan, that's the best trading floor shot that I've seen in this decade. So thanks for setting that up for us. It's so nice to see so many people over there. And you were making the point before you joined us on air right now that a lot of that has to do with the zero-day options that people are talking about. So tell us why that's so critical to all those people being there in Chicago.
Well, Chicago is back. This trading floor is great. It's functioning. It's active. This is almost like the good old days. But the markets are here for risk management, and people just shift their price risk. Now, I don't know if people are doing that enough these days. If they have concerns, that's what the markets are for. But you got to follow what the markets tell you. That's what I do. I'm not smart enough to outsmart the markets, and the markets have had it largely right over the, here in 2023, the VIX is low, so that's very much a positive, and there's so many other positives built in the market right now. The zero-dated options are kind of a phenomenon here because options, and I'm biased, are a better way to trade. So they've taken a lot of business, I think, from some of the futures, and people can use those because they have limited risk and they're a great vehicle.
Interesting, and that's great that those traders can go from futures to zero-dated options. It's funny, I had thought that they were more used by retail, but apparently not. And so relative to the VIX, it makes sense what you're saying. It sounds like maybe the narrative doesn't match what the markets are telling us. If we go beneath the lid, since there's no volatility there, what are you seeing with some of this year's big winners, your Apples, your Microsofts, Googles, NVIDIA, Alan, up more than 100% this year?
Yeah, exactly. We've seen a big turn in tech. Very much a positive. I think what we've been able to do is factor in the Fed. And the markets had it right. They knew where the terminal rate was going to be. They didn't maybe know exactly how we were going to get here. But now we're at the end. Now we got, a 40% chance, according to the markets here, that we're going to have one more little tiny hike. But there was a 100% chance just a couple weeks ago, and there's never a 100% chance of anything, that there'll be a cut by the end of the year. So the markets are putting this past this, and look at all the positives. You got the VIX down, the dollar down, inflation down. So there's a number of things that are positive for stocks. But when you look at tech's made a big comeback, and it may be only some of the top tech stocks, but all the big boys, they've seen, and I measure money flow. And option money flow tells me when people are accumulating leverage positions, and we've seen big plays for months and months in all the big boys, Apple, Meta, obviously.
Yep.
And now we're starting to see it in Google and Amazon. So they're starting to play ball. When you look at the NASDAQ itself,
right,
the largest call buying we've seen since 2014.
Wow.
So what I say, follow the money.
Yeah, and the money seems to be bullish, maybe more upside ahead. Alan Nuckman of Bullseye Option, thanks so much for joining us, and we hope you'll join us again from that SIBO trading floor. From New York, this is Bloomberg.